Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, July the 18th, the year's 2019. Let's talk trading. Embrace discomfort. I was listening to I guess it was a podcast or something yesterday. No, actually, it was on the radio, and they were talking. I can't even remember exactly what they were talking about, to tell you the truth, but something stuck out where the guy said, everything we do is because of discomfort. We're trying to get back to get things comfortable. And I thought about that and it really struck me because I know of something called inspirational dissatisfaction, where you get so fed up or PO'd or disgusted with something. It's just so uncomfortable. The discomfort is just too much that you actually take action and do something about it. Well, what's all that got to do with trading? Well, I made a video about patience and about FOMO and all those things. And see, what they have in common is that it's that discomfort. You're uncomfortable waiting. You're uncomfortable with the feeling that you might miss out on something. You know, you rush to trade because you're uncomfortable. You're impatient because you want it to happen now, and the fact that it's not happening now makes you uncomfortable. So you try to force it, and it doesn't work. Or you're in a trade and you see it go up and it starts to drop, and that makes you uncomfortable. So you pull the plug on the trade only to see it reverse and go and hit that target you'd already set. So the message is that you have to learn to embrace the discomfort that comes along with trading. And let's go right back to these two screens. The risk and money management. One of the reasons you might not pull the trigger and enter a trade is because you don't feel comfortable. But if you have your risk and money management in place, you know the worst outcome. You're going to lose. It's going to hit your stop loss, and you're going to lose that amount of money that you said it's okay to lose. So it's just like if you go to the casino and you put a chip down, you're saying, I'm okay losing this amount. But you probably wouldn't put all your chips down. Well, it's the same thing in trading. You don't put all your chips down. You only put the amount of chips down that you're willing to lose. Your method. If you're not comfortable with your method, then you need to find another method. Okay? And your execution and performance, that's up to you. If you're uncomfortable, you're not going to execute and perform well. That's why you have to embrace the discomfort so it doesn't affect you. Because once again, if you have success, it's going to build your confidence and you're going to increase your competence. And the money and risk management is really, really, really simple. Simple equations. You either pick a dollar amount or the percent of your account you're willing to lose. I mean, if you have $1,000 account, 1% is $10. You say you're willing to put $10 worth of chips down on any particular trade, and that's all you're willing to lose. It's that simple. Now, before I continue, I'd like to welcome some new traders or former old friends to my channel. They're the guys over there at Forex Station. And because I started posting links to my videos there, and they said, "Hey, is that you, TRO? Where have you been?" And it's like, it's funny. I've been here all the time, guys. But you know where I usually post my code, and I know you want me to post my code there, and I put the TRO HL5 indicator there for you. But I'm not trying to troll your forum. I'm not trying to drive traffic away. It's just, I'm one person. This isn't a business, okay? And for me posting my code all over the place, it's just too hard to maintain. So, like if I release an update of HL5, I post it where I normally post it. And those people who donate, they get it along with the donational indicators. Um, when I send out, the batches, usually now it's about once every other month. But the point being is if I put that code all over, then it takes time to make those posts. And my time's at a premium for more than one reason. So really, guys, traders over there, I'm not trying to, drive traffic away or troll or do any of that stuff. So, if you want, I'll stop putting my videos over there. But, I'm just not going to be posting code over there. So I hope you understand. Okay, let's get on with it. For those just tuning in, the weekly open gaps have all filled. You can see the euro yen here's 25 pips off the low for the week. You see right there, it pushed down. Now, those of you who know what I like to do, you see here when this wick zone right down here, this little teeny wick zone, and you see when price dipped down in there and then it crossed out of that. You don't have to use just the previous day's wick zone. You can go back and look and you see what happens here. So you see there's opportunity to catch that wick zone. It's in a couple of wick zones here. It's still possible to go long and make money. But remember, as always, these videos are for educational purposes only, and your results may be different from mine. So Forex and trading and all trading is risky, very risky. You could lose all your money. So if you need advice, seek it from an accredited financial professional. And here we go. Now, I want you to, those of you who know these mid dots, these purple dots here are actually the mid dots. Okay, actually the color's magenta. So you see here on the mid dots indicator, right here, show previous mid. Okay, so one of my old tricks is using the midpoint, previous day's midpoint as a bias. So you see here, price opened below this mid dot and never hit it and pulled back. Then you see here on this mid dot from the previous day, price opened above, but then it shot below and closed below. Here it opened below. So from here on, these open belows, we got these red candles. And so like right here, you see, you get it crossed and closed above that mid dot. Same here. And then you get all these, here another crossed, open below, crossed, and closed above. Those are signals to go high, and this is a signal to start looking for shorts. And so once again, on the daily, you look over to the left, you see a wick zone here, and you see price came way down here and exited that wick zone. So once again, wick zones don't have to just be the previous day. Look at the whole chart, and you can then start playing the wick zones. Okay. In fact, if you had my dynamic wick zone indicator, you could see how that works. Maybe I'll have to make a video of that once again. Now talking about zones, here we go. The first day of the year's opening range, first day of the month's opening range, first day of the week's opening range, and you see we are below all of those opening ranges, which is telling you the bias is short. You see a nice 3-ball at the bottom. We dipped into the right below June's open. You see we crossed back above it. So anybody who took that trade is about 16 pips ahead of the game right now because it went into that area. And you can see that right here. We crossed into the opening range of first day of the month. We almost exited, and now we're coming back up. We're still in that opening range, but you see we almost dropped below it. Actually, we did drop below it by 2 points, not 2 pips, but 2 points, and then it bounced off. You can see that. One ball, I'm sorry, that's a 2 ball, and it made a 3 ball, same thing. Now we're going back up. That's all on the daily. Inside bar, yesterday was inside bar. Okay, you see we entered the inside bar area, we exited. Once again, such simple trades. And right now it's 14 pips up, but we had a low 77, so 14 and 23 is about 37 pip potential profit there on that short. Just breaking out of the previous day's low, there was once again right there, right off the open. You can see though the range is only 44. 2 pairs with ranges over 100. And for those of you traders, in case you're wondering, see TROHL5 is putting in those horizontal lines. Here we've got the holos. You see the monthly H1 lowest open was right there. And so price went in it, rocketed up, gave you another opportunity here, opened, crossed below it, didn't make a new low, reversed, and you can see there's money to be made once again. And the buy zone, there's the pivot point just slightly above the buy zone, not really that strong of a bias. In fact, we never even received a buy trigger. It's all short. And daily prices below the weekly open and below the daily open, you see here there was some small short opportunities, handful of pips, a few times. Rat zone, right here, not much really, only 44 pips. I like to see that number above 50, preferably 60, to start doing rat zone trades. Oh, and by the way, you can use TROHL5 to mimic the rat zone. Here we've got a missed pivot now, but we hit the weekly S2 right here. You see we've crossed below it, but we haven't closed below it. So there's another missed pivot, adding 2 for the month. And price action, once again, price enters a zone, doesn't like to stay in that zone. Every now and then it does. You can see there wasn't much action here on range-wise on the hourly candles. Wick zone, small wick zone, in and out, and just crossing through, almost a horizontal line trade. Okay, my favorite trading screen here, horizontal lines. And just so you guys out there know, 3 versions of HL5. What you do is you change the indicator tag. So I've got one for the daily, and I've got one, see, indicator tag is a 1 here, the other was 0, and that allows it to have different object names, indicator tag 2. So that's how I do that. So tick level, not much happening here. On the Einstein line, once again, small range, just take a handful of pips, but you see we did have a nice cross here. So, fellow traders, that's it.